From an investment standpoint, Bitcoin and technology stocks have never been more similar, and that gives us good insights on how to time both markets. At the top is Bitcoin, at the bottom is the Nasdaq 100. We can see the correlation. They both go down at the same time, they both go up at the same time. Check this out. This is the Bitcoin price divided by the Nasdaq 100. In the early days, Bitcoin grew very quickly. There was a lot of adoption. But over the last 5 years, Bitcoin doesn't outperform technology stocks that much anymore. From one cycle peak to the next, there's close to no growth. We measure this precisely. There was an outperformance of 11% or so, again, over multiple years. But we do have more volatility in Bitcoin. So we need to time the market somewhat to still get outsized performance. We can't just set and forget anymore as we did at the very beginning of Bitcoin's history. So let's say we wanted to time this ratio. We decide if we want to be in Bitcoin or in technology stocks. We use a moving average, for example. Whenever we are above, we are bullish on Bitcoin. Whenever we are below, we are bullish on tech stocks. But what moving average duration should we take? I just put 100 here, but maybe we should have a shorter moving average. Maybe that times the market better. Or maybe we should have a longer moving average. Something like this here. Maybe that's the right way to go about timing the trends. Now I've run a backtest for exactly that ratio, Bitcoin relative to the Nasdaq 100. This comes from Bitcoin Strategy Analytics, the backtesting platform for premium members on this channel. This is Bitcoin relative to the Nasdaq 100. We go long and short. In other words, we either go into Bitcoin or into technology stocks, and we try to find out that best moving average. Here is our solution. It's the 55-day simple moving average. So that's this line over here, which means we should currently be bullish on Bitcoin. But unfortunately, this strategy doesn't really work that well. It used to work well, but things have changed because the numbers, they look okay. So the annual return is higher for timing the market comparing to buying and holding a mix of both assets. The maximum drawdown is lower. But check this out. In gray, we've got Bitcoin relative to the Nasdaq 100. In blue, we've got the performance of the trading strategy. If we divide that performance, the buy and hold strategy, we can see that all the gains were made in the early days, and nowadays that strategy is rather underperforming. So that's a problem, right? We don't want to follow a strategy that in the last years didn't do better than just buying and holding. Still, we don't want to be stuck just buying and holding because, again, Bitcoin doesn't necessarily outperform technology stocks anymore, and it has much more volatility. Can't we take advantage of that volatility somehow when Bitcoin outperforms the tech stocks by almost 4x? So let's do a rolling window analysis. Let's try to find out what moving average worked best over time. So the idea is that we look at the entire price history, Bitcoin relative to the Nasdaq 100, and then we take a certain window that we roll over that time. And then we look at what particular point in time did what moving average work the best. And we find out in the early days, of course, the 55-day simple moving average worked well, but nowadays it doesn't. So how did this change? So here's how this looks like on the backtesting platform. We are looking at this data here. That's the summary. So on the left side, we've got our rolling windows, 4-year windows. This increments by half a year every time. And then on the x-axis, we've got the moving average duration. Simply with 5-day intervals, because we want to keep this clean and easy. The 55-day, that's the line here in blue. And in the early days, this worked very well. But subsequently, post 2018, it did not work that well anymore. And that's what we are seeing in this chart as well, right? Since 2018, this stopped working. But there's an interesting pattern in this chart. We've got our 40 to 60 day simple moving averages working here. Then we've got longer term moving averages. So 120 to 140 over here. Then it switched back again to shorter term moving averages. And now it switches back again to longer term moving averages. Now, I don't know why this is flipping back and forth like this, but it seems like sometimes it's short term trading that works. Sometimes it's longer term macro trading that works. And this isn't an effect that changes within the cycle. It's an effect that takes roughly 4 to 5 years to switch. So every cycle is slightly different. But we can see that now, again, the longer term moving averages work the best. Here, the star over here is the best moving average. Currently, around 130 seems to be the best. And so let's plot 130 on that relative chart. Bitcoin relative to the Nasdaq 100. What does this tell us? It tells us that now we should still rather be in technology stocks, not yet in Bitcoin. Bitcoin hasn't yet developed the breakout. And this is also in line with my personal investments. When I look at other backtests, when I backtest Bitcoin in isolation, when I backtest Ethereum in isolation, when I backtest technology stocks in isolation, seems like it's still a bit too early to get into Bitcoin. There are other metrics that confirm that thesis. For example, here, the net unrealized profit and loss. I like to show that chart because it shows very nicely how we tend to go for the aggregate of the Bitcoin market into net unrealized losses at the end of a bear market. When the average Joe is in losses, that's when the selling stops. When the average Joe is in gains, that's when profit is taken. And right now, the average Bitcoin investor is still 27% in profit. We also see how the market still cools down. The realized HODL ratio is coming down. So that means that short-term trading is shrinking relative to long-term trading. And usually, at the end of a bear market, this effect stops. So the market isn't cooling down anymore. But currently we are still in a cool down period. We are not yet in the green and we are not yet going flat on the HODL ratio. There's also a combined metric, the CBBI, that looks at various metrics, including the HODL ratio and the net unrealized profit and loss. When we look at all of those indicators, we combine them, we get a nice oscillator that in the past did peak close to 100 and it did bottom close to 0. And it did show quite nicely when we are expensive or cheap in Bitcoin, and currently we are not yet at the bottom. We are at 33, we are below 50, so the market isn't necessarily expensive, but it's not yet cheap enough to turn around the current momentum. And so since Bitcoin is more volatile than tech stocks, if the market in general goes down, technology stocks are likely going to hold up comparatively better. In other words, BTC relative to the Nasdaq 100 will go down. And the reason why we want to compare both assets is their high correlation. They tend to go up and down in the same direction at the same time. And when they diverge, there are sometimes opportunities. But the divergence right now seems to not yet be large enough. It might make sense to wait until we have crossed the 130-day simple moving average on that relative valuation chart, which by the way means Bitcoin has to outperform tech stocks by roughly 9% from here. I don't think that's going to happen while the market is still cooling down and while the average investor is still in profit. And so I will keep the bear costume as the icon here as a profile picture on this channel. There will be a time of opportunity again. There will be a time of easy money again. Right now, I still think it makes sense to rather look for opportunities to bet on falling prices. Maybe relative valuations, but especially in crypto, I don't think it makes sense to go too much risk on right now. The altcoins get sold off the most, but Bitcoin, Ethereum, and Solana is also still rather on a macro downtrend. Short term, we get our rallies here and there, but macro, I do believe we are still in a bear market. If you got some value out of this video, feel free to give it a like. It helps the channel grow. Feel free to also subscribe. I publish videos regularly. If you want to get access to the backtesting tool, and if you want to see the strategies that I personally use for trading, feel free to check out the premium membership. Link to premium pops up here on the screen. Thanks for watching and see you next time. Cheers.